Well, sugar has been another big story. Raw sugar sold on the world market has jumped almost 90% this year, near to the highest in 28 years. For more, let's cross live to Sydney, where our reporter Heidi Cooch is standing by. Hi there, Heidi.
Hi, Deb. Well, speculators are taking advantage of the rally in sugar to sell. Scott Joss, president of Clear Trade in Chicago, says the market is seeing some profit taking at the moment, and that sent sugar down the most in 2 months yesterday in New York. Josh, however, adds that sugar is still in a bull market because of supply issues. Rabobank would agree. The Dutch bank says sugar's rally may not be complete, even should prices consolidate in the short term at around 20 cents a pound. Rabobank says weather developments in India and Brazil will be central to market sentiment. Indeed, analysts say the upcoming monsoon season in India may threaten to reduce the country's sugarcane crop, and that would force India, the biggest sugar consumer, to boost imports. And watch out for white sugar too. It rose to a record in London on speculation and improving economic outlook may buoy demand. Traders worry also that a drop in production will worsen a supply shortfall. Higher and rising sugar prices may be a concern for refiners who supply food companies like General Mills, Kraft Foods and Congarra. They and a coalition of others lobbied the US government last week to lift import restrictions to allow them to buy more supplies from Brazil, the Philippines and other exporters. While over here in Australia, one of the largest soft drink makers, Coca-Cola Amatil, says higher sugar prices are unlikely to impact earnings in the December half, and that's thanks to hedging. Zeb, back to you.
Thanks so much, Heidi Cooch, joining us live from Sydney. Well, for more on sugar and other commodities, we have a special guest from Singapore today. Michael Coleman is Managing Director at Ashleen Analytics, and he co-manages one of the world's biggest and best-performing commodity hedge funds. And Michael, we welcome you to the program. Your merchant commodity fund, it employs long-short strategies. It's up 7% this year, soared 24% last year, compared with the average hedge fund, which lost 18% in the same period. So we appreciate you coming on and sharing your views. Before we get to specific commodities, I want to talk first about your overall views, because you called the slump in commodities last August, about a month after the peak. The markets recovered somewhat, but still below last year's peak. Curious where you see commodity prices headed generally.
Very difficult question, actually, at the moment. We've had quite a significant rebound from the lows of actually most commodities made their low in December last year. That's been driven by a lot of Chinese buying, fiscal stimulus, so on and so forth. From here, it gets much trickier to call. And really, it's a macro call, I guess, overall on GDP growth and issues such as where the dollar's going to. So not too much clarity, I think, from these levels at the moment.
Well, you were spot on with your call on sugar, going bullish on the commodity back in February. And obviously, you continue to be bullish. It's your biggest long position. Can you tell us what your outlook is for sugar at the moment?
Yeah, I mean, sugar's caught in a bit of a perfect storm at the moment. That you have basically two large annual deficits running concurrently for the 2008-09 season and prospectively now for the 09-10 season, driven primarily by the Indian situation, which I think your earlier segment was talking somewhat about. And really, over the next 6 to 9 months, there's no obvious solver from the supply side. So the current Indian crop that's being planted is under stress from the monsoon rains. That crop, we think, is unlikely to be much more than 15 million or 16 million tons again for 09-10. And really, the world has to depend on Brazil. And there are some issues in Brazil around how much of Brazil's cane crop can actually be turned into sugar. Over the last several years, the Brazilian sugar millers have invested heavily in ethanol production capacity and have somewhat neglected their fractionation capacity for making sugar. And so Brazil seems to be fairly maxed out in the short to medium term, at about 43% of its capacity able to be delivered to the market as sugar. And so you have a big hole in the world supply-demand situation. That hole's focused primarily on India. And so there's no supply solution obvious for the next 6 to 9 months. Therefore, price has to ration demand in the short term. We've just made 28-year highs. 30-year highs are 60, or 35-year highs are 66 cents a pound, which is probably a bit of a stretch. 1980-81, we got up to 44 cents a pound. So it's a bit, you know, will it reach those levels? I don't know. Is there a possibility of reaching, you know, 40 cents a pound? Certainly. But really it depends, from this point on, it sort of depends on how price affects demand for the commodity. And
Michael,
historically, sugar demand is... Yeah, sorry.
That's all right, no problem. Let's talk about the spread between white sugar and raw sugar. We just had a chart on the screen. Maybe we can bring it back. It shows it widened to its biggest this year. Curious what trading opportunities you see for these two commodities, raw sugar as well as white sugar, given this spread.
We're actually moderately bullish white sugar premiums. The way the supply and demand deficits work out is that initially the problem will be in white sugar, and so you're seeing that refining margin widen out. Over the longer term, that then translates into more demand for raw sugar, as India particularly needs to ramp up its domestic white sugar production from imported raws. So that premium can get stronger. So we're quite friendly the white sugar premium at the moment.
Michael, sugar obviously an element in ethanol, an ingredient of ethanol, that alternative fuel. Ethanol futures fallen about 7% this year, but they were up a third day this week on rising oil prices. Just curious from your view how sugar is going to benefit from this scenario.
Probably the main benefit from this scenario won't be sugar per se, but it'll be actually corn. So there'll be less ethanol available from Brazil at the margin, because Brazil will now be maxing its sugar production, and therefore domestic demand for U.S. ethanol will be met increasingly from domestic sources. So probably good news for U.S. ethanol producers.
And Michael, just very briefly.
Sorry.
Nope.
Yeah.
Carry on. Go ahead.
No, I was just going to say that, of course, assumes that we continue to have quite a steady petroleum situation. So at the moment, ethanol blend margins are quite positive.